Good morning, I'm Carol Hardmer from the International Trading Institute, and I'm going to look today at the Eurodollar first. Now I'm going to give you the bigger picture in the Eurodollar because the chart is actually quite exciting, and we can then narrow it down to the daily and the 4 hourly chart. We can do that. But when you're looking at a market, I always look at the monthly markets first and then work my way down. Very rarely do I go below a 4 hourly chart because you get a lot of noise, and unless you're a short-term scalper, you don't really want to be caught up in the noise. You want to be more a strategic trader. So anyway, the Euro monthly is looking quite interesting, which is why I've dragged it up, and I'm now going to show you why. Now, people put Fibonacci levels in the most amazing places. I don't conform to the standard books, which is why I've never, had time to write a book or been inclined to write a book. I take it from where I see the leg down or up. So I've put my Fibonacci levels up here to here. Now, if you look, you can see that around this level, okay, which is the 61.8 level here, you've got a lot of resistance. You've got from the charts, if you eyeball it across, yes. But you've also got this 61.8. Now we've tried 7 times to break it. The monthly charts have turned bullish. We've had a 3-day upward move in the Eurodollar. So we'll take a look. And what I like to do is do your homework. It takes time. This isn't a get-rich-quick scheme. It's going to take a lot of time and patience. So what I would do is on a Sunday night, I would, especially if it was the end of the month, I would do all my monthly levels, I would do all my weekly levels, I would do all my daily levels, and I would try to get a fib level, get a moving average, get a, whatever it is you use, pivot point, and I'd put them on the chart. So at a glance, I could see where there was a glut of selling or buying. I'll go into that in more depth tomorrow at our first webinar, which starts at 2 p.m. your time in England, 3 p.m. in my time, Spanish. Okay, we've got a fantastic guy that's going to talk you through lots of slides, and then you'll have me going through current situations live and showing you how I've worked and structured trading over the last 4 decades. Okay, so let's go back and have a look and see what the market is doing. So we've done the monthly. So what we want to do now is you keep that monthly chart or those monthly levels on the chart, and we'll take that down. I think to a daily, because the levels are still going to be the same, but you're going to see more of the noise. So in the daily chart, for example, okay, you can see quite clearly this little glut up here, but you also see the basing pattern down here. You are seeing a basing pattern on high stochastics, And it's only when those stochastics got to the 90% area and double topped, we came down, but we clung to that fantastic moving average that I used, the 50-day. We just clung to that. Now, there was no other reason for it apart from this little bit over here. And this is what you use moving averages for. You use moving averages as support and or resistance. You don't do what we were taught back in the day and use them when they cross, because frankly by the time they've crossed, you are not going to do too well. The 200-day moving average is where you see the institutions come in, all right? And even though we went below it, we closed on it and then up and away. Double topped, come down, held the 50-day moving average, up we've gone, held the monthly 61.8. Now, the market looks like it's going to trade higher, but if you want confirmation, which we do, we all want confirmation of markets. We are by nature second guessing ourselves, and I do as well at times, not often, but at times I do. But that's why I use the same system that I've used for when I started trading. I'm in the, if it's not fixed, don't mend it. No, it's not broke, don't fix it. I'm in that level now. So what I'm going to do is I'm going to show you how the dollar index correlates with the euro dollar. And if you're trading the euro dollar, you really, really do need to be on top of this dollar index, because it's weighted so far in the euro's favour, and it gives you clues as to where the market's going to go and confirmation of what you're thinking, you're seeing, and this is just one added little bonus. So I'm going to put us over to the dollar index now, lovingly known as the DXY. And our DXY, I like the dollar index chart, I do. So here you have the same daily chart on the dollar index. You can see clearly that the dollar index it double topped around here again. Again, when you see something like this, it's a low reward trade to actually sell, preempting a double top, stops 30 points above the previous high. Now I'm going to look at this on a weekly basis, going through it with you. So, you can confirm. Look at our daily stochastics, they're still going down. It just gives you a little bit more longer term perspective. Right. So if you look at that, you can see that we closed below the 200-day moving average. Okay? That's going to be important, and that will affect the euro dollar. So if you are trading, please be aware, keep these levels. Even though we all have computers now, I personally write everything down. And I put what I feel is important on my chart. I'm trying to strip the charts down for you so that you don't have a load of indicators on there and a load of other stuff that really doesn't relate to the market. if you used CQG back in the day, you know, they've got 400 studies. Seriously, you'd be trading at every level. Pick the ones that you're comfortable with, or pick the ones that I've tried and tested over 40 years. And I do back test. You know, I'm not completely stupid. I do back test, and I found nothing better. Now, I hope that this is going to help you today. As I said, you know, we are doing our first webinar tomorrow, and it would be great if you could come along, have a look, see a bit more behind the scenes. I'm more upfront trading, and my partner tomorrow, Sunil, is a very good, very, very good guy. He's in the market, and I think you'll enjoy it. And at the end of the day, you know, just come along, have a look, see what you think. Okay, good luck for today. Okay, and I'll catch you all tomorrow.